All right. Are we calling this a dead cat bounce? I think what a lot of investors, a lot of traders, a lot of holders want to know is, when do we see this bottom? Do you think there's a cycle in play, the 4-year cycle?
Well, if anybody has a crystal ball that works better than mine, they can send it over, because I'm not quite sure if it's dead cat bounce or the bottom. But to me, this does feel like it could be a bottom, and there's a number of reasons for that. Technically, a lot of people are looking at the 200 MA on the weekly chart, a line that's been visited every single time the 50 MA is broken in a bear market. That's at about 57, 58,000 right now. The monthly 50 MA is there. Yesterday, we saw major capitulation volume, systematic selling all the way down to the close. But today's volume is actually going to close higher on the buy side than all of yesterday's sell volume combined. And across the board, not just on Bitcoin, across the crypto market, we're seeing some bullish engulfing candles, some beautiful potential bottoms being put in. So I think that we saw bearish euphoria at a fever pitch yesterday, and now we're probably going to be heading up, barring any major black swans. As for the 4-year cycle, I'm in the camp that the 4-year cycle is over, if it was ever there in the past. We do have one data point for people who believe, which was that the all-time high would come in October, but nothing else about this cycle has looked like the past. There was really no movement across the crypto market beyond Bitcoin or anything that had an ETF. And we had an all-time high way too early because of the approval of the ETFs. Really just doesn't feel like the same cycles as we had before.
That was kind of my thought last year. I was asking a number of guests in 2025. We have the most bullish regulatory backdrop for Bitcoin or crypto that I think you could ever have, and we still saw things kind of peter out a number of times. I thought the gain should have been bigger given the backdrop. Does crypto need a new narrative beyond Web3 here?
I don't think that it needs a new narrative. I think that the best narrative for Bitcoin is always higher prices. Unfortunately, Bitcoin starts to go up.
That takes money.
Retail gets very excited. It does, but it's not very hard to push this market around. To your point about the environment, yes, we have a very favorable legislative environment. We have a very favorable regulatory environment. Obviously, the pendulum has swung massively from the contentious environment that we had with the previous administration. But that said, I think all of that was effectively priced in at the moment that Donald Trump was elected. And so it's not that crazy that prices are now trading back to the same area that they were at that point. Also, with the election of Donald Trump, there's a bit of a push and pull. I think a lot of people are very unhappy, and it's become politically charged that his family and himself are so involved in the industry itself that has become a bit of a political talking point yet again for the quote unquote anti-crypto army. So I don't know what the next catalyst will be, but I do know that Bitcoin is becoming massively institutionalized. You have news from every single wirehouse, every large institution about their participation in this industry and the unlocks and the incredible volumes of the ETF. So this is one of those times when prices have been beat down, sentiment is low, but there's crazy fundamental news that should be driving price up. And we're going to look back in a few months and go, wow, those news events were absolutely huge. We should have been paying attention.
So Bitcoin usually gets almost all the headlines, especially when it comes to mom and pop investors. And there's been all kinds of stories on the institutionalization. People can buy them in their 401ks. But what about some of the altcoins? And what about Ethereum itself? If we can go to the Wi-Fi Interactive, I have our cryptocurrency heat map here, and it shows the year-to-date performance. So here's Ethereum down 31%, Bitcoin down 20%. If I sort by performance, the final row here, I mean, it gets all the way down to 50%, and we're only in February. Do some of these altcoins have a chance of coming back, even if Bitcoin manages to do so?
Many of them absolutely do, but I have a haunting feeling that we're going to be in a world of have and have-nots. And the haves are going to be those that have ETFs, treasury companies, some level of institutional adoption, institutions actually using their blockchains for various purposes. And the have-nots will be those that are left behind only to be traded by retail on crypto native exchanges that institutional investors don't have access to. So I would keep a very close watch on that. I mean, right now, obviously, Bitcoin, Ethereum, Solana, XRP, and others have ETFs or have narratives like that have compelled them to have higher prices than many others. I don't think we see, for those who've been in crypto a while, we used to have what we like to call an alt season where altcoins just go absolutely crazy. You talk about 10, 50, 100 X's, and you throw a dart and the next one goes. I don't think we ever see that again. I think we're going to actually have to look at utility and fundamentals and valuations like with other markets. But I do think that a lot of those tokens will do exceptionally well.
And what about the Bitcoin treasury companies and the other treasury companies that might have Ethereum? MicroStrategy, of course, Michael Saylor's strategy is the biggest, most famous of them. What happens to them? Obviously, higher prices, record highs would kind of cure the situation, but the strategy itself has taken a beating, and it's been a high beta play on Bitcoin. Does it lose that edge? Does it regain it with higher Bitcoin prices? How do you see that playing out?
Volatility to the upside would be exceptionally good for MicroStrategy or Strategy and probably other treasury companies. That said, I've told this story many times, but I went to the Bitcoin conference in Las Vegas in May, and I was pitched 7 Bitcoin treasury companies in the first 5 minutes I was there. And I became probably the most aggressively outspoken voice in our industry against the idea of the treasury companies. I said they would likely be a bubble. They would be the reason for the next Bitcoin collapse. I didn't necessarily expect it to happen so fast, but that's one thing that had my spidey senses tingling from the very beginning. I think that there's room for MicroStrategy. There's not room for many more. Right. And Bitcoin itself is a very hard asset to use to beat using Bitcoin. It actually intellectually makes sense for an Ethereum or a Solana treasury company because they can stake in the network, earn a yield, and then they can actually beat the performance of that underlying token. You can argue whether that token should be a treasury asset or not. That's not for me. I believe Bitcoin should. But I was always a big fan of a company taking their actual profits and cash flow and putting some of that into Bitcoin as a hedge against the losses on their cash. But actually financially engineering around Bitcoin, Saylor can do it, but I'm not sure anybody else can.
All right, circling back to the beginning here, we're talking about the bottom, at least the tradable bottom that we have right now. Does it lead to more selling in a few weeks? We don't know, but you sound kind of bullish. So give us your bear case for 2026. How does that play out?
I think the bear case is that Bitcoin continues to drift lower. There's really no meaningful catalyst. And honestly, at this point, I think the biggest bear case for Bitcoin is if the stock market rolls over, right? I mean, I think we can all take a look at stocks at the current valuations and people are scared. We had this interesting moment a few weeks ago where the stock fear and greed index was at extreme fear with stocks 2% off all-time highs, right? So people are very scared, even though stocks are very high. So I think we see some black swan event, all correlations go to 1, and everything goes down together. That said, when's the last time that happened? March of 2020, right? Bitcoin dropped from 6,000 to below 4,000 in a matter of hours on March 12th with the COVID scare. 13 days later, I believe the stock market bottomed. Well, the stock market pulled a cute 2x from there, and everybody talked about how amazing that stock market was. Bitcoin went up 17 times. So if we do see an event like that, what asset do you want to be in for the inevitable ascent out of that hole? So I am very bullish on Bitcoin here. I see a lot of reasons for it to go up. I think that the selling has reached capitulation and irrational euphoria, as I said, and I'm very bullish.
Scott, it's been great talking with you. Thank you for all your insights here.
Thank you.
The velocity that we saw throughout the week, sort of picking up steam. What's going on there?
I'll just make one quick correction. CoinDesk, not Coinbase. So you owe 1 Bitcoin in the
I do. Oh my goodness.
There, but you said it perfectly at the beginning that the bear market really started in October with a big deleveraging event that was very crypto native. That was on the 10th of October. That gave the positive vibes of the bull market that had carried us through so much regulatory process. It ground to a halt very quickly. And the mood, I wouldn't say it changed to fear. And I think even before yesterday, we weren't really in a fear environment, but a skepticism and boredom environment where, crypto, all of crypto kind of as a not necessary, a not core asset, was feeling the same kind of lack of conviction that we're seeing in some of the other kind of future-based technologies like AI. So up until before yesterday, I think that, it wasn't a happy market, but it wasn't a fearful market. What happened yesterday really was quite different.
And what made it so different?
I think we really had a second deleveraging event. You could see by the velocity and by the inclusion. I think probably the most interesting thing to look at, now crypto is a very, they're very segmented. There's a lot of crypto native leverage activities. There's a lot of perps, a lot of trading on exchanges like Binance and Coinbase and our parent company Bullish. And then there's ETFs and ETF options. Yesterday saw really record-breaking volumes in the IBIT ETF and the IBIT ETF options. That really brought volatility quite high. There was a lot of option buying yesterday. There was a lot of option buying on crypto's biggest crypto native options exchange, Deribit, yesterday. So whereas even last week, gold volatility was higher than Bitcoin, which is remarkable in itself. Yesterday, you saw a lot of option buying, and it had the feelings of something that had some leverage in it being unwound. With all this motion going on with precious metals, it's not too hard to take those apart. That there was a lot of fast money that was darting for new homes yesterday. So it was a day where you really had to just watch, and like one of your quotes said, a terrible time to try to make speculative trades for people. You never want to trade a market when it's this volatile, but you just have to watch and see if that got flushed out.
A lot of people were trading in the market when it was that volatile. That's to be sure. That's for sure. Ines, what have you been seeing here, and what do you read? Because I know you read very widely. The research is out there. You talk to a lot of people. Where is the sentiment sort of coalescing now as to what's going to happen next?
Well, Julie, Sean Farrell over at Fundstrat had said the sentiment seems to be a fear and fatigue, really, from crypto native holders, basically. But look, the worst, it's on pace right now for the worst week since 2022. We'll have to see how it goes, because we are seeing a rebound today after yesterday, and yesterday was the worst daily drop since 2022. But certainly there has been sort of a sentiment shift since that October liquidation that you were just talking about, and whale selling also, which really started in the summer and really picked up sort of in the fall. But 10x Research also is a firm that does a lot of data. They analyze a lot of data and flows, and they have been talking about this overhang that is with overexposed holders of spot Bitcoin ETFs, and basically saying that their cost average is around 90,000, and many of them would have wanted to sell at higher levels. And so you have this overexposure happening. That's an overhang, as well as with Ethereum as well, which is what they've been seeing too. I will say that the feeling is that the bottom may have not been reached yet. I mean, we saw this big, massive drawdown, but there is the possibility that we're still going to be going lower. 10x is saying that probably in the summertime is where you see the real buying opportunity. Sean Farrell over at Fundstrat is saying that he's deploying some money right now, but he does see that there is a risk that you could go lower even.
Yeah, and that seems to be sort of consensus on Polymarket too. We were looking at the odds for that, and it looks like the majority here, 28% of the odds makers saying 55 will be the low just this month. So this doesn't say that the bottom won't be below that. It just says could fall as low as that this month. You've got the brave few saying that it's going to rebound to 85,000, 13% there. Andy, what about you? What are you hearing out there?
I think the medium term. I was at an event earlier this week that the Ondo Summit, and we got a chance to talk to a lot of influential people and people who know what's going on in Washington. The mood around the Clarity Act and its passage, which would be a fantastic catalyst, probably the largest catalyst for crypto in particular, is that would get done before Memorial Day. We don't have a personal call on that, but the consensus view or the modal view is that will get done, and progress is faster.
Is that really going to help the price, though?
Oh,
absolutely. But usually you see a rally into a news event. In any other regular asset class, you anticipate something, you buy in advance of that. Yeah. We have not seen that in this case, even as it seemed to be getting closer.
I agree. I think that the market would still treat, let's talk about the best case, the market would treat completion of Clarity Act almost as a surprise at this point. Maybe in the days leading up as evidence accumulates. But right now, there's really not a lot of market-based hope, right, that clarity would happen. It's going to be a big fundamental shift. On the skepticism side, there's a lot of AI parallel building. There's a lot of tokenization building, a lot of stablecoin building on the hope that there's a lot of demand out there for these kind of products. We think that there is, but again, it's speculative. You're kind of building things and hoping that they get consumed. And I think, again, anxiety and skepticism have crept into this idea of adoption and growth. Right now we're still, it's funny, crypto's still a young asset class. It's still something that is sitting on the outside, on the satellite part of most institutional investors' portfolios. It's not a core asset yet, and it can get flighty. So when people are experiencing paper losses, they tend to get a little anxious. So
yeah, and these are big paper losses.
they are big paper losses. The asset class, though, from a fundamental point of view, is as strong as ever. Its adoption is as broad as ever. It's every day that it lasts, it's lasted another day and it's grown another day. The education narrative continues to expand. The regulatory efforts continue to expand. And just blockchain technology with things like collateral movement and settlement of securities, that's not going to turn around. That isn't, it has oil tanker type speed and agility, but it is certainly moving. You can see a wake behind that.
And that's sort of independent of the Bitcoin price.
It's independent of the Bitcoin price, but crucially, right, a broader rally, those layer one blockchains, Ethereum, Solana, some of the more specialized blockchains like Avalanche or the Oracle companies like Chainlink, they will be part of that, right? Fidelity issued its first stablecoin. Tether issued a US compatible stablecoin. These, to the extent that these things really help improve things and present new features that people use, it's technology that, like AI, that's going to take a while for people to have that aha moment. But we feel stronger than ever that it'll happen. The Genius Act was a great start. Clarity will be another second piece.
Ines, I got to ask you about strategy also. We talked about it a little bit earlier with our Jared Blickery, but the pioneer of this whole digital asset treasury structure, it's not looking so great right now, right? I mean, so it's not trading at a premium anymore to the underlying price of the Bitcoin that it purchased. And that seems to be kind of the locus of a lot of the concern around what's going on right now.
Yeah, that's right. And we know that they had set aside that fund for that volatility that we would see in crypto. But when you talk about the cost basis, I mean, it is trading below their cost basis, their average cost of what they have purchased for. So yes, it's not looking good for digital asset treasuries in general. There is expectation that there will be consolidation, that there are going to be these companies that, especially the newer ones that came in at the tailwind of all this, and those may not survive. I mean, there may very well be large consolidation. This, of course, is sort of the poster child for these kinds of companies because they've been buying since 2020. But if you take a look at their stock, I mean, year to date, it's up, but year to date it's down 21% over the past year, down more than 60%. But Julie, I did want to mention one note that you were just talking about the market structure bill. I do think that is very significant for Bitcoin because we saw that when Coinbase had sort of said that they didn't like the version that they saw recently. We saw Bitcoin really reacting to that. And strategists are saying without a big catalyst, it's hard to see Bitcoin going a lot higher. You do need that market structure bill to go forward. The question is, will it or not, because of the midterms that are coming up as well.
Good point. Ines, Andy, got to leave it there. Thanks, guys. Appreciate it. And if you want to look deeper into more prediction markets around crypto or anything else, have a look at the Prediction Markets Hub on Yahoo Finance, powered by Polymarket.
You had your big summit, the Yahoo Summit in New York this week. What was sort of front and center? What were folks talking about?
Yeah, the energy in the room was very high. The topic was primarily tokenization. And really 2026 is the year that people expect tokenization to fully enter into the mainstream. There's been a lot of growth in the categories. Tokenized treasuries just hit $10 billion. Tokenized stocks are at $1 billion. Stablecoins obviously are still a major topic. Ondo is the leader in both the treasuries and the stocks category, so it was very nice for us to also convene all the industry executives there. But you can tell that the likes of BlackRock, Franklin Templeton, Fidelity, State Street, they're all there. They're all getting more into the space. So 2026 will be the year of tokenization.
Patrick, I want to bring you in here as well, because I would imagine another topic, Patrick, I would think, my friend, would be crypto legislation. We're trying to get it across the finish line, right? Regulatory framework, Patrick, for the digital asset sector. We seem, Patrick, to have hit a bit of disagreement here between crypto exchanges and banks. The Journal had a great write-up. I'm sure you saw it, great reporting. The Journal, Patrick, kind of framed the central issue as, listen, crypto exchanges, they want to offer consumers payouts on the digital tokens they hold, a kind of a recurring fee. And the issue would be the fee, Patrick, it's going to be more, it looks like, than what banks could offer in terms of interest on your bank account. And so the worry from banks would be like, okay, does Josh and all his friends, do they make a move right out and into crypto? What do you just make, Patrick, of this debate, and how do you think it plays out?
This is a great question because the stablecoin legislation with the Genius Act was passed in the summer of last year, signed into law, and there's been this flood of innovation in traditional finance players getting into the space on stablecoins. In that bill, there was permissibility for stablecoins to issue rewards of some sort. Yields is the common parlance here. Now, what the banking industry, and especially the banking lobby in Washington, they were surprised. They weren't able to block the Genius Act, and so now they're taking on market structure, which is really about 95 to 97% of the value of crypto. 3 to 5% is in stablecoins, and the main part of legislating is around the larger market structure for crypto. That market structure bill is held up because the banks have activated and they want to ban rewards or undo the policy gain crypto made in the Genius Act. And so cooler heads will eventually prevail here, but it is certainly slowing down the market structure bill. And this is largely a debate by large banks and the banking lobby in Washington and the primary player with the category right now, which is Coinbase. They offer yield through holding USDC on their platform. So that is the big debate right now. That's the big coverage and the big fight in Washington. We had at the Ondo Summit yesterday, we had the president's executive director of the Crypto Council, and that's a man named Patrick Witt, very sharp, who sits at the interplay between traditional finance and crypto and is helping the White House drive policy on Capitol Hill. We interviewed him, and he is focused on getting this resolved so the president can get a bill signed before early summer. And that was the news made yesterday in our interview of him at the Ondo Summit.
Can I ask you, Patrick, though, when you say cooler heads prevail, this sounds so tense at this point, Patrick. You saw this. I mean, per the Journal of Davos, Jamie Dimon, he tells Coinbase CEO Brian Armstrong, you are full of blank. It's a family-friendly show, but viewers can fill in the blank.
Horse excrement.
Right. Yes. Yeah. Citi's Jane Fraser gave him less than a minute of her time, so Jane doesn't sound happy. Bank of America CEO Brian Moynihan tells him, this is blunt, if you want to be a bank, just be a bank, he said. If you want to be a money market fund, just be a money market fund. I mean, this sounds so acrimonious. In a prior life, Patrick, you were a congressman. You had to herd cats. You had to bring people together who disagreed. How would you do it here?
What has to happen is a law change to take away the advantage that Coinbase was able to get in the Genius Act, which enabled them to give rewards on their platform. So the current law is actually disadvantaging banks. Banks want to use the market structure bill to gain what they lost in the Genius Act. So if nothing happens, the banks are not better off. And so you eventually will grind them down and say, look, you have to split the difference between what the banks hope to gain, which is to completely undo the crypto gain in Genius on rewards, versus what Coinbase wants, and I would say largely crypto wants, which is to be able to incentivize the use of stable coins in the payment system. And so there will be eventually an outcome because the president will demand a bill. And the banks think that they have the advantage right now, but the president will demand a bill and will demand movement by both crypto and the banking industry. That is a real advantage right now. When I was chair of the Financial Services Committee, I had Biden as president. Now my successor has the advantage of Donald Trump, who's pro-crypto in driving policy. That enables a lot of movement and eventually gets Capitol Hill to take action.
Ian, a bigger picture question for you. Crypto, we know it's volatile, of course. Bitcoin, though, we are back here at about 73,000. So crypto assets are being hit. Why are they being hit, Ian? Do you think it's because some folks on the show have suggested, listen, a lot of investors say, hey, the party seems to be in precious metals, in the prediction markets, I'd rather be there. Do you think it's that? Do you think it's the regulatory uncertainty that we're talking about here? Is it both?
I think crypto's always been volatile, right? Typically, Bitcoin follows the 4-year cycle. At some point in that 4-year cycle, near the end, there's typically a deleveraging event, and after that, prices remain subdued for a while. A little bit unclear in terms of how long that lasts. We had that deleveraging event in October 10th, and since then, the crypto market really hasn't fully recovered. Liquidity also isn't back. But what's interesting to see, to your point, is that back in 2024, crypto, when the prices started to rise, crypto is being introduced into the traditional financial system via the ETFs that BlackRock, et cetera, all launched. Now, in 2025 and 2026, we start seeing traditional financial assets being introduced to crypto rails and being listed on crypto exchanges. These are tokenized stocks, ETFs, treasury funds, and the like. That is what Ondo does. And so now, for the first time, crypto kind of has to compete with some of these assets that are being listed on these crypto exchanges. And globally, investors have significantly more access to these stocks, to gold, to silver, to metals, et cetera. And so I think that creates a new dynamic that crypto hasn't really had to deal with before.
When we talk about tokenized security, Ian, my dad's listening right now probably. He has no idea what you're talking about, just none. If you were to explain that to Andrew in plain, simple terms, we mean a security represented by a digital token on a blockchain. What's the benefits of that?
Well, the moment you put a token that represents a traditional financial asset on blockchain rails, you get all the benefit of that new infrastructure. That means that you can move these assets around 24/7, right? Imagine that you could transfer the stocks that you hold right now in your brokerage account immediately to your Coinbase account or to another type of wallet, and they would just arrive instantly. You can, as a result, take better advantage of different margin rates on different platforms. You can freely transfer them globally to someone else as a gift. There's a lot of benefits that you get the moment you tokenize because then these assets live on crypto rails. It's very similar to the benefits that a stablecoin gave for cash. Once you tokenize stocks, ETFs, and the like, you get those same benefits. You can send them globally, use them 24/7, list them on crypto exchanges, trade them 24/7. All that stuff's not possible with normal stocks.
You see, if my dad was listening, now he knows. Now he gets it. Ian, thank you. Patrick, Ian, thank you as well, sir. Appreciate it.
Thanks for having me.
with you.
Jared, you and I have been
Yes.
talking a lot about this lately. We've been watching it. 75,000 was your level.
Yes.
Obviously, it went below 75,000.
Yes.
Well below 75,000. People on Polymarket think it's going to keep going down. So.
Yes, right there.
Yes, exactly. Okay, so what are you seeing in the charts?
75,000 was a very important technical level. It was the low from last year, that's 2025. It was also the high from 2024. And so that was kind of my line in the sand. And I said, if it starts kind of probing below that level and then it acts as a resistance, here's a chart. Let's just put the 5-year up there.
Oh, well, hold on. This is the bind.
Oh, good catch there. Let's put Bitcoin, because they do look kind of similar here. And let me just take it down to a 3-year. So as I was saying, we got the highs of 2024, we got the lows of 2025, and now we are below them, and solidly so. That's not even close. So what I said is that's probably crypto winter. And the beginning of it was actually up here, although we didn't know it at the time. And I keep hearing analysts talk, incredible analysts, about the 4-year cycle. And I know you've talked, and you've read the same 10X research here.
Yes, exactly. So 10X research, you and I both read the report this morning, and they're talking about a potential low of 40.
Yes.
And they say that's not going to happen in the short term. They're looking more towards sort of September. FIFA, I think the World Cup is like their peg for it.
I looked that up. So that's mid-June to mid-July. And so that would be the beginning of the window. And I think September would be the end of the window. So we've seen this cycle play out before. Let me put a 10-year chart so I can show you what happened over the last crypto winter. So here we had 20 to 2022. We had this double peak here, and then it took a while to find a bottom. We eventually did, but then it's off to the races. Here we have a little bit of a different structure here, but a double peak, and it looks like, if you extend this line, we'll have that bottom maybe sometime in the fall, or maybe as early as summer. But I was talking to Mark Newton on an episode of Stocks in Translation. He's the top technical strategist for Tom Lee, and specifically mentioned the 4-year cycle, which I thought was interesting. And let's take a listen to that.
I don't sense it would go down 80%. Personally, I think it's going to be capped. I think Bitcoin, in my own view, goes to 60, between probably 60. High 50s, 60. I don't think it's going to be a straight shot.
So he's not quite as pessimistic.
Well, he did say it could dip into the 40s. So I'm not hearing anything about an 80% wipeout. So I guess that's the good news. And the other good news is that Bitcoin is very cyclical. We've seen these cycles play out before. And so you just got to kind of hold yourself right here if you're a holder, or if you want to buy, just wait a little bit.
Well, what I thought was really interesting about that 10X research report is the whole industry. I mean, you and I have been talking to people in the crypto industry for a while. They were so excited about institutional adoption. It's going to become more normal for people to hold Bitcoin. Well, guess what? That's a double-edged sword, because when it starts going down, those institutions are not necessarily willing to step in there because we don't know how much more it's going to go down.
Right.
And they are buying and selling in more size than a retail investor.
I think the bottom line too is we need kind of a new catalyst. Web3 was, it's kind of petered out, and I've looked into the venture capitalist markets. They're not able to fund projects the way they were in the past. They're just not attracting investor capital. So there needs to be a new thesis here, some kind of, maybe the technology hasn't even been invented yet. Maybe it integrates with AI in some way, but the old paradigm is kind of dead here. 2025, the most bullish year in terms of financial regulation for Bitcoin ever, and we didn't really see that much.
Well, and that suggests that the Clarity Act, which the industry is now pushing, including and sort of led by Coinbase's Brian Armstrong, which will clarify more of the pipes and the regulation around crypto, that suggests that even if that does get through, it might not be a very long-term catalyst.
No, I think we need new tech. That has to be the catalyst here, but that's just my personal opinion.
We'll see if it happens.
All right.
Thanks, Jared.
Thank you.
Good stuff. And you can find crypto predictions and much more by going to the Yahoo Finance Predictions Market Hub, powered by Polymarket.
So let's talk about Bitcoin here, Ryan, because this morning, Bitcoin actually touched, let me get this right, a 10-month low. It's now down, Ryan, about 40% here off that record high of about 126,000 in October. What is going on here? Help us make sense of this, Ryan. What are the pressures on Bitcoin?
Look, Josh, there's a lot of pressure on Bitcoin at the moment. As you mentioned, we're down more than 40% from the prior all-time high above 125,000. And so there is pressure on Bitcoin right now. I think part of that pressure is coming from gold taking the spotlight and other commodities taking the spotlight. And I think the other element of this is that we are just in the midst of a Bitcoin bear market. We've actually been in a bear market now for many months, probably more closer to a year. And so I think that's what's keeping Bitcoin down. We've now seen it kind of drawing down the most over that period overall. But nonetheless, it's a bear market. It's a bit dark right now in the crypto space, but we think there's brighter times ahead.
What are those brighter times ahead, Ryan? Walk me through. What are some catalysts 6 to 12 months out that you have on your radar?
There's a few major catalysts for Bitcoin that we see over the next year. First, emerging from this bear market is critical. Sentiment right now is at an all-time low, particularly amongst retail investors, which of course historically have driven the Bitcoin and crypto market more broadly higher. So while that sentiment reverses as we emerge from this bear market, that will be important. But I think more important than retail investors this time around for Bitcoin is institutional adoption. That's a major catalyst that's multi-years and long-term oriented. And we're seeing that happen at Bitwise in the conversations we're having with institutional investors every single day. Major wirehouses, RIAs and family offices and the like are all starting to come around to Bitcoin. They're asking serious questions about making Bitcoin and crypto allocations. And that's a very long-term oriented catalyst.
So Ryan, with Bitcoin here around 78, do you all at Bitwise, you do targets, Ryan, like a year-end target for Bitcoin?
Yeah, our view this year going into 2026, when Bitcoin was trading around 93,000, when we published our report about 2026, was that Bitcoin would hit new all-time highs this year, and it would break what a lot of market observers have deemed this 4-year cycle that has historically plagued crypto. So we believe Bitcoin will be higher. Our long-term view for Bitcoin is more decades out than years out, and we believe Bitcoin will hit 1 million over the next decade, driven by institutional adoption that I just spoke about.
There's another sort of storyline out there, Ryan. I'm just curious to get your take on this, which is, well, what about Trump nominating Kevin Warsh, right? Trump has said, okay, Warsh, that's my guy. That's who I want leading the Fed. Warsh, historically, Ryan, you know this, you would think of him as more hawkish, right? Concerned about inflation. And do you think maybe that's playing a role here? In other words, some folks thinking, okay, well, hold on. If it's Warsh, maybe not such loose monetary policy ahead. What could that mean for Bitcoin?
Yeah, Josh, it's a really good point. Warsh is a pro-Bitcoin person. It's important to note. He understands Bitcoin and is supportive of Bitcoin, believes it has a place in portfolios and that it's breakthrough technology and important to the world. I think that's really important. But you have that against the backdrop of him being seen as more hawkish and not, being for the growth of the money supply, which historically has been supportive of Bitcoin. So you have these two different sides tug of warring at each other when it comes to how it will impact Bitcoin. I think net, we will see interest rate cuts. The market's pricing in about 50 basis points of cuts over the remainder of this year. I think we will see that. Not to say Warsh isn't hawkish, but I think he'll be a bit more dovish than most people are expecting.
What about ETF flows, Ryan? I'm curious, just broadly for spot Bitcoin ETFs. You have line of sight there?
Yeah, so ETF flows for Bitcoin ETFs have been remarkable when you zoom out. They've been the most successful ETF launches of all time, in the tens of billions of flows in their first year and in their second year. But that has come down a bit over the past few months. As I mentioned, we believe we're in a bear market currently. And what that's led to are things like the basis trade, which is very popular around Bitcoin ETFs run by hedge funds. That has collapsed a bit. We've seen outflows from the ETFs because of that. As I mentioned, we've seen attention flow to other asset classes like commodities, like tech stocks. And so ETF flows have slowed. Corporate purchases, on the other hand, of Bitcoin are starting to reaccelerate. We've seen MicroStrategy buy tens of thousands worth of Bitcoin already this year. And we think that ETF flows will turn a corner as we have major wirehouses and other institutional investors onboarding Bitcoin ETFs to their platforms. Morgan Stanley, UBS, Merrill Lynch, Vanguard, all of these asset managers have approved Bitcoin in recent months for their wealth managers and their clients to invest in. I think that's a huge catalyst going forward, but it takes time. Not all of those wealth managers allocate right away. Some take months, some take quarters, some take years, but net, when you zoom out, that's a lot of demand for Bitcoin over the next decade.
I want to come back around, Ryan, to a point you made earlier. How much of Bitcoin's slide, Ryan, do you think we chalk up to excitement in gold, in silver, in the precious metals? In other words, how much do you think investors said, well, hey, that looks like a fun party going on over there. I don't want to miss out on that. I'm going to move there and not Bitcoin.
Look, as a Bitcoin guy, it's hard not to see what's happening in the gold market and think that's a fun party. I don't want to miss out on it. I think the gold trade has started as a push by central banks to increase their gold allocations in a world where having self-custody of assets, being able to move away from reliance on other governments and other central banks is important. And so we've seen central banks increase their purchases of gold starting really in 2022 and 2023, and it's been accelerating. I think now gold's turned into more of a momentum trade. We've seen the runaway price of gold and silver and other assets. So I do think that plays a bit of a role here when it comes to what's happening in the gold market. But the fundamental thesis for gold is that it's a way to store value outside of any government or bank and to custody your own assets in a world where you're worried about fiat debasement and you're worried about spiraling debt and irresponsible monetary and fiscal policy. And those same topics are things that we've been speaking about when it comes to Bitcoin for now over a decade. And I think that those themes are going to eventually land investors on the point that Bitcoin is a digital store of value, much like gold is a physical store of value. So I think the same themes drive Bitcoin higher over the next decade as have driven gold, but gold's in the spotlight right now.
Ryan, as always, great to have you on the show. Thank you.
Thanks, Josh.